The first thing you'll notice when you look at a chart are the candles. They usually feature one or two wicks and a body. On a green candle or a bullish candle, the wick at the top represents the high, whereas the top of the body represents the close. The bottom of the body represents the open, and the wick on the bottom represents the low. Hey everybody, it's Erik, your favorite YouTuber, back once again. And this week I want to discuss some basics as it pertains to understanding your chart better. The crypto bull run is upon us, and I just want to go over some things that will help you in your investing endeavors. The first thing you'll notice when you look at a chart are the candles. They usually feature one or two wicks and a body. On a green candle or a bullish candle, the wick at the top represents the high, whereas the top of the body represents the close. The bottom of the body represents the open, and the wick on the bottom represents the low. Since the candle is bullish or green, it makes sense for it to open at a lower price point and close at a higher price point, indicating rising price action. The wicks represent fluctuations within price. However, there is not enough liquidity to close at that point. That's why a bullish or a green candle can have a downside wick and still be considered bullish, because it did not have enough liquidity to close at that point. On a red or a bearish candle that features two wicks, the wick to the upside still represents the high. However, the difference is the fact that the top of the body of a red candle represents the open, and the bottom of the body of the red candle represents the close, whereas the wick to the downside represents the low. So just like a green candle can have a wick to the downside, a red candle can have a wick to the upside, yet still be considered bearish as it did not close at that point. Those are some basics as it pertains to candles, and now I'll go on to discuss some of my favorite indicators, one of which being the MACD, or the Moving Average Convergence Divergence. It's an indicator that features color-changing bars that correspond to the market. If the market is in a downward trend, producing red candles, then the corresponding bars on the MACD will appear red. In the midst of a downward trend, if the market manages to produce a green candle, then the corresponding bar on the MACD will appear light red. However, in the event of an upward trend, as the market is producing green candles, then the corresponding bars on the MACD will be green. However, if it manages to produce a red candle during this upward trend, then the corresponding bar on the MACD will appear light green. When you see consecutive light bars, you can think of this as a particular trend losing its momentum. However, just because you see consecutive light bars does not mean that a trend reversal is imminent. This indicator also features a fast-moving average line and a slow-moving average line. In the event that the fast-moving average line crosses above the slow-moving average line, this could be a bullish signal for the market. In the event that the fast-moving average line crosses below the slow-moving average line, it could be a bear signal for the market. The next indicator that I wish to discuss is the volume profile matrix. The horizontal bars represent different levels, and the length of each bar indicates how strong they are. The longest bar will have a red line protruding from it that will indicate the fact that it's the hardest level at that time. Of course, these levels are constantly changing with time and depending on your chart interval as well. The last indicator that I'll go over, and perhaps my favorite, is the RSI, or Relative Strength Index. And like the MACD, it features a fast-moving average line as well as a slow-moving average line. However, the difference here is that those lines lie in between a set of values that tell you whether the asset is overbought or oversold. Those values being 30 and 70. For example, as the fast-moving average approaches 30 and even dips under that point, it's indicative of the fact that the market is oversold at that time. And vice versa with 70. As the fast-moving average approaches 70 and even goes beyond that point, it's indicative of the fact that the market is being overbought at that point. Both of these can signal a trend reversal. This is a great indicator. However, I do want to exemplify the fact that just because the fast-moving average touched the overbought line or it touched the oversold line doesn't mean that a reversal is imminent. There are times when the fast-moving average will go way below the oversold line, experience a small trend reversal, and range in the middle of the RSI before falling right back on its face. So I want to communicate how powerful of an indicator it is, but also highlight the fact that it's not perfect. No indicator is. But I hope this helps you in your investing journey. Shout out to everybody in the Crypto Nuggets chat, and shout out to you too. Thank you guys for watching, liking, and subscribing. God has a plan for your life. Thank you for allowing me to make my contribution.